Welcome to The Explainer. Today, we're going to break down the hidden language of stock charts. We're going to get into how professional traders really read the market's flow to find their edge, and we'll do it using one of the most powerful, most fundamental tools they have, the moving average.
First, we're going to tackle the one core problem that trips up every single trader. Then, we'll build up the key concepts and the specific tools you need. After that, we'll walk through the rules of engagement, break down a classic trade setup, and we'll wrap it all up with a simple playbook you can use to make much sharper decisions.
All right, so to really get why these tools are such a game changer, we have to start with the most basic piece of information on any chart, the price itself.
Let me ask you a really simple question. If a stock is sitting there at $10, should you buy it? Is that a good deal? Is it expensive? The truth is, there is no way to know. It's impossible to answer, because that number, all by itself, means absolutely nothing.
And this illustrates it perfectly. On the left, $10 is just a number floating in a void. But look on the right. When you see that same $10 price as part of a chart that's been in a free fall, well, suddenly it tells a completely different story, doesn't it? And it's not a good one. Without context, price is just noise.
So that's the whole point, right? We need a way to create that context. We need some kind of baseline to judge the price against. And that is the entire job of technical indicators. And the most fundamental of all are moving averages. They're what give a price its meaning.
Okay, so let's get into how these simple, kind of squiggly lines on a chart actually transform into this universal language that traders, algorithms, and giant institutions all over the world speak fluently.
Think of a major moving average, like the big 200-period simple moving average, as a traffic light. Now, a red light works for one reason and one reason only, because we all collectively agree that red means stop. It's the exact same principle at work here.
And what this creates is an incredibly powerful, self-fulfilling prophecy. Look, there's nothing magical about the number 200 itself. The power comes from the fact that millions of traders and billions of dollars in computer-driven funds are all programmed to see that line as a critical line in the sand. So when the price gets there, they react, and it's that reaction that makes the level real.
Now, what's so cool about this is it completely flips your entire mindset. You're not trying to be a fortune teller here. You're not predicting what's going to happen. You are just a skilled observer, reading the same page of the same playbook that everybody else is looking at. Okay, so we've got the why behind these things. Now let's get into the what. Let's assemble the specific tools we need to actually read that market language.
So there are really two main flavors we're going to focus on. First up is the simple moving average, or SMA. Think of this as the slow and steady one. It's smoother, and it's what big institutions and long-term investors watch. Then you have the exponential moving average, the EMA. This one's the fast mover. It reacts way quicker to price changes, which makes it the go-to for active short-term traders.
But we don't just pick one. The real power comes when you layer them together to build a complete picture. The big 200-period averages, both the SMA and EMA, they show us the huge macro trend. Then the 20 EMA acts as our midterm guide. And finally, the little 9 EMA is our super aggressive short-term momentum indicator. Altogether, they give us this incredible multi-layered view of what the market's actually doing.
And for those of you trading on the really short-term charts, like a 1 or 5 minute chart, we add one more powerhouse tool, VWAP. This stands for Volume Weighted Average Price, and basically, it's the true fair price for the day, based on every share traded. It's simple. Is the price trading above that line? The buyers, the bulls, are in charge. Is it below? The sellers, the bears, have the upper hand.
Now look, anybody can load up a chart with a bunch of indicators, but knowing the rules of the road, the non-negotiable principles for using them, that's what separates the pros from the amateurs.
Rule number 1, and this one's a biggie. The 200-period moving average is the big boss. You have to respect it, period. Whether you're looking at a daily chart or a 1-minute chart, any price action happening above that line, we consider it bullish and healthy. Anything happening below it is bearish and suspect. It dictates the trend. End of story.
All right, rule number 2, and please, please don't forget this one. You have to look at the bigger picture. Multi-time frame alignment is everything. You see this here? On the 1-minute chart, everything looks amazing. It's a perfect breakout. But if you aren't zoomed out, you have no idea you are about to slam face first into a brick wall of sellers sitting right at the 200 SMA on the daily chart. A perfect micro setup will always fail if it runs into macro resistance.
Okay, enough theory. Let's put this stuff into action. We're going to walk through a classic, bread and butter momentum trading strategy. It's called the Micro Pullback.
The logic here is it's beautiful in its simplicity. We're not chasing a stock that's already gone to the moon. No. Instead, we find a stock that's in a strong surge, and then we just wait. We patiently wait for it to take a tiny little breather to pull back and kiss our super fast 9 EMA. And that's our entry point to ride the next wave higher. We're buying a small dip, but only in a very strong trend.
Now, to really stack the odds in our favor, we want some confirmation. For that, we use an indicator called the MACD to help us see the momentum. When you see its lines are green and spreading apart, getting wider like you see here, that's your signal. That tells you the momentum window is wide open. It's go time.
And, just as important, this tool keeps us out of trouble. I mean, look at this chart. At first glance, it looks like it's about to rip to a new high, right? Super tempting. But then you look down at your momentum gauge, the MACD, and what do you see? It's dying. The lines are crossing over. This is a classic trap, a warning sign that the move is exhausted, and chasing it here is a terrible bet.
So let's bring it all home. Let's boil everything we've talked about down to one simple, final, actionable cheat sheet you can use to make a clear, confident go or no-go decision on a trade.
First things first, you gotta think like a pro. And pros don't trade all day long. They know a stock might move for hours, but the cleanest, strongest, highest probability trends, they usually happen in the first hour or so of the trading day. That's the window of opportunity. They focus their energy where they have the biggest edge.
And here it is, the final takeaway. Before you even think about clicking that buy button, you run your idea through this simple checklist. Are your green lights on? Is price above VWAP and holding the key EMAs? Is the MACD showing momentum is open? And is the daily chart clear of major resistance? At the same time, are any of those red lights flashing? If even one is, you walk away. This is your objective framework for execution.
So in the end, these squiggly lines on your screen, they're not a magic crystal ball. They're a language. They give you a way to read the story the market is telling, to see the collective psychology of buyers and sellers in real time, and to spot these high-probability patterns before they fully play out. So the only question left is, now that you know how to read the signals, what are you going to start seeing on the charts?